On early Wednesday, market participants got to know the usual comments from Japan's authorities. However, this time, officials of the central bank and the Ministry of Finance radically disagreed about the dynamic of the currency market. Several Fed policymakers are also scheduled to speak today, considering that Neel Kashkari reversed the dollar yesterday with the only one remark. The New York session today may also be marked by high volatility. Traders are keeping close tabs on the dollar-yen pair because the dollar can easily turn over or go up. Given opposing comments from the Finance Ministry and the Bank of Japan officials, a new rally of the US dollar could be on the horizon. The dollar-yen pair is trading in the intraday corridor between 154.50 and 155.70. It looks like the markets are ready to take on a new challenge and return to the 160 yen per dollar. On a Wednesday morning, Shinichi Suzuki, a forex diplomat of the Ministry of Finance, assured that the Japanese interventions on the currency market could happen at any time or at any level. At the same time, Bank of Japan Governor Katsuo Ueda expressed the viewpoint that monetary policy does not control the foreign exchange market. Perhaps the statement of the Japanese policymaker is true, but it applies more to the dollar-yen pair. Meanwhile, the US dollar index has passed the level of 105.5, and the bulls are already targeting to the high of April 16 at about 106.50. As the US dollar is carrying on with its broad-based recovery against all major currencies, it remains the best-performing asset in the G10 and G20 baskets. The main driver of its growth will be not only the difference in interest rates compared to G10 peer currencies, but comments from Fed policymakers. Yesterday, Minneapolis Fed President Neel Kashkari said that stubbornly high inflation could keep interest rates at the current levels for longer. In the currency market today, ready to respond with the same wave of volatility to the remarks by the Fed Reserve Vice Chairman Philip Jefferson, as well as the Boston Fed Presidents Susan Collins and Lisa Cook, a member of the Board of Governors. As the market sentiment on Wall Street after the recent growth, traders seem to have taken a breather. The S&P 500 opened the New York session in the range of 5,165 to 5,171 points and was mainly consolidating. Meanwhile, European central banks have already begun to cut interest rates, and the Swiss regulator cut the policy rate in March, and the Swedish Riksbank did so today. Most of the ECB policymakers have announced that their intention to cut the refinancing rate in June, and the Bank of England is also gradually moving towards its first rate cut. Moreover, the regulator will announce its policy decision tomorrow. In this context, forex traders are braced for a surge in volatility, even though tomorrow almost all European markets are shut for the holiday. Most likely, the market will fully respond to the Bank of England's decision on a Friday. In any case, Europe seems to be the leader in the transition to lower interest rates, so the euro comes under pressure from the US dollar by default. As a result, the euro-dollar pair has already reversed down from the resistance of 1.08 and slipped by more than 50 pips. This price move caused a wave of selling. Traders should keep in mind that the bullish impulse for the euro, which rose in mid-April, has not yet been completely broken. Only if the instrument firmly settles below the support of 1.0750, the door will be open for the next stage of the euro's fall, and this time in the direction of 1.07. Given that the bullish scenario is still relevant, this fall can be considered a pullback within the overall bullish cycle. Crude oil is not going to give up easily and lose positions it took yesterday, and the data from the American Petroleum Institute spoiled the overall picture. Instead of a decline in the US oil inventories of 1.4 million barrels, the report logged an increase of 0.5 billion barrels. In addition, despite the sharp decline in oil prices, the largest oil exporters continue to remain silent. Most likely, some reaction will follow only if the price falls below $80 per barrel, but with Europe heading into the long weekend, that won't happen until next week. Today, the benchmark Brent grade is trading below the level of 83, and this indicates the clear interest of sellers. Despite the technical signal that the commodity is oversold, market participants ignore it and continue to push the price down. So, due to inertia, Brent risks falling even lower down to $80 per barrel. You have watched the market review by InstaForex analysts for Wednesday, May 8. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments. So, see you online tomorrow.